gold and silver, precious metals, are not some short-term speculation. Buy the dip says that you're going to buy at lows and hopefully sell at highs. Well, markets go up and down. Gold and silver could go down for a period of a couple days or a couple months. Is this the bottom of the dip? I don't know. It could go down further, but it can't go down a lot. But gold will go higher. This is something I am very confident of. I'm not guaranteeing it for you, but I have bet my life that gold is going higher, a lot higher than where it is right now. And it is the geopolitical concerns that we've got going on right now and the rampant inflation that is the driver for astronomically high gold prices. So the risk-reward ratio, there is a little bit of downside risk potentially, but it's short-term, and that is limited by the cost of gold mining, ultimately. The reward ratio is, as you're going to see toward the end of this video, pretty darn high. So this is the reason that I have bet my life on gold and silver. Now, I've been buying wealth insurance since gold was $315 an ounce, and I found out about silver when it was how undervalued it was back in early 2003. So gold since October of 2002. And I have been buying steadily through this whole thing. Now, there's some patterns here I'm going to discuss in a moment that are extremely bullish. You already know about one of them. But I want to point you to these two articles here. The Gold Market Update by Clive Mond. Slingshot advance is still in its infancy. Slingshot. So this is the big move. We are going there. There may be some pullbacks left. I'll show you something in a minute. But also read still huge upside from here on the silver market update. This is much bigger upside actually than gold because of the gold-silver ratio. But here's a pattern. I've mentioned the cup and handle pattern, which includes all of this. But there is also an inverse head and shoulders going on. We haven't broken the neckline yet, but when we do, look out. There should be some big, big fireworks. So what was going on back in the 70s? This is the 1970s here, and this was one of the greatest bull markets of all time. Silver went up 37 times its original price. Gold went up 24 times its original price. But as you can see here, the big move comes at the very end. And the difference here, if you compare this to the market that we've already had in precious metals, the move from the year 2000 up to 2011 was a greed-driven mania. And here, this big old spike here is a panic-driven buying spike in precious metals. So this is where, this is people chasing after gold and silver as wealth insurance. And so what drove this? What drove it was the Iran hostage crisis, the oil embargo, so very, very high oil prices, and raging inflation. Well, this is something I've been talking about, this bull market, for a decade. And I said, this is what drove it. But when I was saying that when we were fighting deflation and the Fed could not achieve 2% inflation target. They kept on creating currency, lowering interest rates, and nothing worked. They couldn't create the inflation that they wanted back then. So we were fighting deflation. We didn't have the threat of some huge war. Today, we have raging inflation, high oil prices, and the tail risk potential. But this is a potential. It's a tail risk. It's not the most probable outcome, but it's within the realm of possibilities. World War III. This isn't 50 hostages being held by a little hostile government that doesn't really have any weapons. This is the other great nuclear power and the United States. And to me, this is time for wealth insurance. So what else is different? Well, back in the 70s, if you look at this chart, this is the amount that the U.S. owes, our debt, as a percentage of gross domestic product. And it was down at 44% in 1941, and then with World War II, almost 120%. But in the 70s, you had 35%, 31%. It averaged about 1/3 of the U.S. economy. Now we're up at 106, but wait a minute, this chart stops in 2019. Why? It's annual data, and for some reason, they know what 2020 was, and now they know what 2021 was, but they haven't posted it yet. I wonder why. Well, this chart gives you historic context. It goes back to 1939. The next chart zooms up on it. This is quarterly data. It's as of the end of last year, except it only goes back to 1966. But still, you can see there's 30.8%, there's 30.7%, 30.6%. So that decade averaged about 1/3 of GDP, and now we're up at 123% of GDP, coming down from 136% of GDP. So we're already in this debt pit. We have these astronomical asset bubbles in stocks, bonds, and real estate. It's the almost everything bubble, not the everything bubble. Gold and silver are not in a bubble, and they were the number one, and until cryptos. Gold, the bull market of the 70s was the greatest bull market in the shortest period of time that mankind had ever experienced.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. The fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.